Everybody, it's Nick Groves here with Trading Analytics, and today I'm going to wrap this market up as we gear up for the close here in about 5 minutes. I'm taking a look at this rising wedge here in the S&P futures. How relentless this market has been. It just seems like a very low vol grind higher. The VIX is certainly subdued. The VIX is actually on the lows not seen since March, so it's came down quite a bit. So will it turn around? I'm not entirely sure. The only thing I would note is from a daily RSI perspective is that it's, these lows at 41 or so have held most of the year. They broke recently, so you really need to see it get back above there before you can get too excited because it's been quite subdued. But what's really been running the show today has been the Dow. I pointed out earlier on Twitter that we hit this 161% extension. It stalled it for a brief bit, and now it's back on its tear. One thing I would note, though, is that on the Dow Jones cash is that we finally hit this 786 extension, and we did it quite aggressively. So I wouldn't be surprised if it actually came off just a little bit. It's nothing other than bullish right now. One thing that's been kind of subdued is the Nasdaq. The Nasdaq continues to fight this resistance line here. This resistance line dates back to March, and it's been holding all week. The Nasdaq just looks like it's consolidating before it decides what exactly it wants to do. And the S&P, it did also come up to its 786 at 52.10ish, so we're sitting up there right now. But I know that we have a lot of options priced in with a 5200 call wall, so I'm just very hesitant as it feels as if this market could stretch higher up towards 5222 or even higher. I have some other targets around 5230 that coincides with the S&P futures. If they want to actually come up and tag its 786, that comes up at 5256. If you factor in the diff from the cash, it's around 5230. So I'm taking a look at that. But as far as big tech goes, when you take a look at the Mag 7 composite chart, you'll note that it's down about 0.5% today. That being said, though, it is in a bull flag pattern. Now, if this bull flag plays out, this market will be back at all-time highs. It's quite, if you're a bear, it's nerve-wracking to see this development because you don't want to see that break out. But one thing that is at all-time highs today was Amazon. Now, Amazon at the moment is actually creating a false breakout as it comes into this trendline support today. Prior to starting this film, I was thinking, we could extend up even higher, up towards 196 or so, which is entirely possible. And also that big round number 200 is up there, which that should, somewhere around here, should act as resistance if it decides to turn back higher. But for now, it's putting in a false breakout of the all-time highs. NVIDIA, another one I've kept a close eye on. I was looking at it like this, like a bit of a triangle. It broke it, and also it was bull pennant at one point. But it broke it, back tested it. Now we're back sitting around the lows of the session. So we'll have to see how it plays out. You could probably draw this like somewhat of a flag. If you were to draw it like this or so and see if that's how it wants to be, or maybe it just turns into a channel that extends further south. So, but I'd be looking, if these lows break, I'd be looking at support here around 868. I think that offers pretty decent support. Apple, it's been a bit boring for me to say the least. Since it gapped up here in early May, it's just been kind of consolidating, but I will note it's at the 618 from the highs to the low. And when I take a look around at this market from a broader sense, one thing that really stuck out today to me was utilities. Utilities, since this low, it's going even further. Since this low in April, that spike low down here, it has rallied 14%. Like, what a move that we're seeing in it. That's after it broke out from this resistance here and actually back tested it. So this is pretty, well, if it wasn't confirmed, then it is now. It is a confirmed breakout. Now, that's not necessarily bullish risk. Utilities are a defensive sector, so is energy. And sometimes I like to take a look at some ratios. Like I look at the Nasdaq to S&P ratio. This is the energy to S&P ratio as well. And when I take a look at this chart and I overlay it with the S&P, some things that I notice are, when this ratio starts to go for a run, equities can fall. When this ratio takes a dump, the S&P goes higher. We saw earlier, this earlier in, I guess, late April, this ratio took a dump and the equities have taken a rise. Now, I will note that we are at, I think, the 50% retracement or so of this move here in the ratio. So when I take a look at XLE as by itself, XLE has been extremely strong. From the lows of January to the highs, it's pulled back to 38.2. Now that's the continuation fib. It's also now sitting in a bull flag pattern. So if this gets a break above 95, which do note that from a weekly perspective, these are levels not seen since 2014. If it gets back above there, it could actually not be too good for risk. I wouldn't be surprised if we're seeing these big extensions if it were to turn around. That being said, though, we need much more development before we can get bearish this market. But the fact that it rallied up and only came down to the 38.2, if you look at other areas of the market like the S&P, the Nasdaq, the Dow, they all retrace closer to their 50 to 618. So this is a strong market right now, and I think everyone should keep an eye on it. But I'm gonna be updating you all on Twitter. That's Trading Analytics with an X. So just check us out on there. I like to give updates throughout the day. We're talking about everything between Dow, S&P, copper on this nice little breakout, which is confirming right now, I believe. Let me just show that. So Dr. Copper's breaking out. So there's a lot of information on here. Happy to be on this ride with you all, and I will be around shortly. So thanks so much and enjoy your evening.